All right. I'm Kat. Today we're going to be talking. I'm Kat. Today we're going to be talking about the latest student loan updates and how it impacts mortgage close. Again, please feel free to ask any questions. Know that this is being recorded though, so um, it's just being recorded. So if you want to share something anonymously, just be aware. If it's a general question, sometimes people bring up like personal borrower scenarios, which is fine too, as long as you're okay with this being recorded. I just always want to make that disclaimer. So the purpose of this presentation is really quick, latest updates. Yeah, no worries. We will definitely be sending out the recording. We will at the end also be giving out a flyer that loan office as well. There's going to be people coming in as well. Flyer at the very end that you can use. It's a borrower case study that you can use with your own borrowers. That's going to be at the very end. So keep that in mind if you want that. To also, we could send that out, but we definitely want to make sure that people are here. We'll get it. So the agenda for today, latest updates on student loan repayment. What's going on? What can lenders do about it and loan officers do about it to help their borrowers navigate change to improve their ability to qualify? What documents is Loan Sense able to get borrowers, and what is required to get borrowers for underwriting despite the turbulence and all the changes with student loans? Live Q&A. Again, I mentioned that Q&A, you're welcome to raise your hand, do it by voice, chat it, whatever is easiest for you, okay? So we're gonna dive straight in. Just a recap of what Loan Sense is we help lower student loan payments, improve debt to income, improve affordability by 50 to 80,000 on average in 21 days. There are certainly people we help improve affordability by 100K plus. So those scenarios do exist for sure. And we boost mortgage revenue as well as compensation for loan officers by helping their borrowers afford more home, right? Plain and simple. The borrower benefits for those who are new to us is we save money on the monthly payment, improve debt to income, and in 7% or so of instances, we will get loan forgiveness immediately. Not immediately, it takes some months, but you get the gist. And helping them enroll in income driven is really the way to go about best managing your student loans to avoid credit dings and defaults. And we're going to talk about it because a lot of rising credit dings right now because of servicer changes. So we're going to talk about what is it that we can help your borrowers do if that's the scenario. And then, of course, free up funds to save more for down payment. Who doesn't need that, right? Okay, in light especially of Freddie and Fannie, FHFA saying that they're no longer going to be purchasing loans, endorsing down payment programs, which is very unfortunate, especially for the borrowers we help. So what can we do to help them save more for down payment, right? We can help them get out of debt more effectively and help drive down payment savings, okay? So I just want to share this because people ask us, how are you different than people doing it yourself? This is from the case study we'll share at the end, but I just want to highlight this. Casey applied for an FHA loan, sorry. She had a 356 payment. She called NowNet after waiting on hold for a couple hours. Now the wait times are 3 hours plus with some servicers. She got a $153 payment. We secured her zero, but obviously she was FHA. So we used a different proof of income to get her payment to 88. So that's literally around half of what she was able to do on her own. And we could get her zero if she were a Fannie Mae loan, okay? So that's what we can help borrowers do that they can't do on their own. We can help them get the payment they need for the mortgage process along with the docs and help them manage the overall loan forgiveness program, especially if they qualify for that pathway. So, okay, now that I give an overview, let's jump into, I want to jump in. This is just one last slide. What do we do that's different? They don't spend hours on the phone with their servicer. We expert file, we help get the docs for close, and we also help them get all the loan forgiveness support that they need. And we walk with them after post-close to help them best manage their student loans. And that is what differentiates us from them doing it themselves or them going to studentaid.gov and trying to decipher all the legalese. What is it I should be doing? We just take all that out, take out all the wasted time, hours and hours that you and your borrower may have to spend, right? So one quick trivia question before I jump in the news. What do you guys think is the average age of a person who pays off their student loans? You can chat it or chime in. What do you guys think is the average age of a person who pays off their student loans? To grease the wheels with participation here. Oh, I like it, Chuck. 50. Oh, Grace also says 50. Okay. Wow. Okay. That's really good. So for undergrad and grad school, it's 43. But bringing up 50 is really great, Grace and Chuck, because 50 plus is the highest amount per borrower that's being borrowed right now because of Parent Plus loans. So it's a great guess because 43 is payoff for undergrad and grad school, and now people above 50 are borrowing more than ever for their children. So literally 55 plus is where the highest balances are now starting to emerge. So that's a great answer. Okay, so now let's dive into the news, why you guys are here, right? And of course, some of this may not be news to you. Some of this may be news to you. So let me know how deep, what questions you have, how deep to get into this. And let me know if you have any follow-up questions. You can chat it or raise your hand. But basically, we all know that the Biden era SAVE program, essentially, even while he was in office, was challenged by the courts. And that was the most generous payment relief program ever created. Unfortunately, it wasn't created by Congress, so the courts were able to challenge it. And by challenging it, it put millions of borrowers, about 10 million borrowers, immediately into forbearance, okay? And you all know as lenders what happens in forbearance. The regulators require that you use 0.5 or 1% of the balance, despite the fact that more than almost 60% of all borrowers are on some form of payment relief program or do qualify. 2/3 of all student loan borrowers qualify to reduce their payments. And if they have already reduced their payments, that benefit would not be reflected on mortgage underwriting because you would still have to count 1% or 0.5%, right? That negatively impacts people's ability to buy because their actual payment, let's say they had 100,000 student loans, if you're trying to qualify them for Fannie, it's 1,000. For FHA Freddie, it would be 500, when in actuality, their payment could be $153, like in Casey's instance, right? So the fact that they have to use 1,000 or 500 hurts them, right? Doesn't help them, hurts them. In some instances, it might help, right? You might have a really high standard payment, and the fact they're in forbearance using 0.5% is better. But again, we could still lower it for most people lower than the 0.5 even. So all income-driven payments have also been put on pause illegally. And I say illegally because income-driven repayment program has been authorized by Congress. So this administration can't really stop it. And so what happened is they stopped it for 2 weeks. It was challenged by the American Teachers Federation. And so they had to reopen the application online. By law, they have to reopen it. They are not processing it as quickly, or basically saying we're not going to process it even though the application is up. So what are some workarounds that LoanSense has discovered, right? I'm going to go into that right after I talk about the credit dings. The reason that this is very negative is because income-driven repayment gives access to loan forgiveness through public service loan forgiveness, teacher loan forgiveness, all kinds of different forgiveness opportunities. It negatively impacts it if people can't enroll. So what is it that LoanSense can do to help people still get the mortgage docs that they need, right? That answer I'm going to go over as soon as I talk about another issue. I'm going to talk about 2 problems and then 2 solutions, okay? Another problem we're seeing lenders come with a lot is people are getting credit hits. Like, it's like they come to us and they're like 60 to 100 points of their credit score just dropped. Like their credit dropped by 60 to 100 points, literally because the servicer reported 3 late payments. How do I help my borrower qualify for mortgage when their credit went from 658, 660, now down to 550? That's really bad for them. They need to fix that if they're going to qualify for mortgage at the rate, at the best possible rate or a better rate, right, than they can at 550. So please help us. Like, we have credit, like loan officers and borrowers coming to us. So essentially, why is that happening? It's because Biden released a on-ramp into repayment that ended January 1st of this year. which means any non-payment from last year that wasn't going to hit people's credit is now starting to hit people's credit. We started warning people about this last year, but of course, and we started telling all the borrowers we work with, make sure to know when your payments are due, make sure to get on income driven, make minimum payments, right? Do not just ignore it, because the fact that we've ignored it for 4 years almost is now going to start catching up with people, right? And that's exactly what's happening. One, it could be partly due to their fault, but secondly, a lot of it is not due to their fault. It's due to servicer mismanagement and servicer changes. So a lot of a couple major servicers contracts ended and they did not renew. So for example, the biggest one was Great Lakes. They didn't renew. So all their portfolio of like almost 9 million borrowers got transferred. And in that transfer, people received very confusing communication. We had borrowers come to us with up to 4 different notices on when their payment starts again. 4 notices. Imagine someone being told, okay, your payment starts April. Now they get a second notice. No, it starts June. Another notice, oh, July. Another notice, oh, May. So it's like, how do you know when your payment is actually due, right? And so those servicer changes and lack of proper streamlining has created hell. I'm sorry to say that, but hell for a lot of borrowers in terms of they already have anxiety, but now it's like I have more anxiety because when am I supposed to really pay it? That's why we tell everybody, set it up on auto pay as soon as you get any type of notice, right? But of course, that doesn't always happen because people don't remember their logins, et cetera, et cetera. You can go on and then they call their servicer. They're on wait for 2 hours. They don't get through. They hang up the phone. They forget about it. And then they start getting credit dings, right? That's what's happening. So what can be done is the real question, right? Because we could be here to talk about the problems all day long, but that's not why we're here. We want to talk about the solutions, right? So I'm going to go through the solutions to these 2 issues, people in forbearance and credit dings. Happy to take questions about this and or anything else, okay? So the first thing is, what do you do for borrowers? The number one thing we do is assess their repayment options. We do a comprehensive assessment. How are there other repayment options that are not considered income driven that they could exit forbearance in one of these other plans to restore mortgage eligibility at a lower payment? We will analyze that for them. We will help them enroll in said plan and get the docs that they need for mortgage closing. A said plan could include extended, which we don't usually like to enroll people into, but if that's the best option for mortgage qualification, we will. There's also a second pathway to obtain documentation from the servicer showing expected payments after their forbearance, okay? And here's a sample letter we're able to help get a borrower. Let me know if you have any questions about this. This is a notice on their repayment schedule. And this is basically just saying that this person is enrolled into income driven. They paused their payment, but they're expected to pay again in 13 months. Again, completely accepted by underwriting and does not use the word forbearance anywhere. Because the minute they say forbearance, underwriting has to use the 1% or 0.5. But by asking this notice of repayment schedule change, it shows that the borrower did not put themselves in forbearance. They're actually on an income-driven plan. They just are not going to make payments until their qualified recertification date. And so this documentation, as you could see, came March 21st of this year. We can get documentation like this that still shows 12 plus payments. This person had a conventional Fannie Mae loan, so they were able to use this doc. There are a couple alternatives if they can't use zero, but the point is that there are ways to get the proper documentation for underwriting without necessarily changing plans, even depending on their scenario. Loan Sense will fully analyze that for the borrower and help get the right documentation for mortgage closing. I know that's a lot, so let me pause. Are there any questions about what it is we're trying to help borrowers achieve? And again, a disclaimer is that we can't guarantee 100% of what's going to happen even in the next month or 2 months, because we literally have to work with the system as it changes to best help the mortgage industry because the student loan world does not talk to the mortgage world. They don't understand underwriting. So we literally have to make sometimes special requests of servicers on what the documents are sending back so that we can make sure to qualify specific borrowers that come to us with specific issues, okay? So it's kind of a back and forth sometimes, but we're there to support the borrowers on this journey because when they win, everybody wins, right? Can you remind me of the turnaround time on this? Well, this borrower, literally, we track this. This borrower enrolled. Melanie, when do you happen to? I know we looked this up and we knew this. You reported it to me, but when was it that we enrolled this borrower?
We submitted paperwork March 6th, so it was literally less than 21 days.
Yeah. Okay. So March 6th, and this letter is dated March 21st. So that's 15 days. This was the turnaround time for this doc, 15 days. And this was Melanie, can you explain what was this borrower? Did they try to do it themselves? Like what transpired before this? Just so they understand the full scenario.
Yeah, so she was actually a return client. She was a return client. She previously was enrolled into Save. She planned to close a year before, but it got delayed because of work. And so finally she decided that they're closing April 1st. And now she went to us the first week of March to get a consultation and see and say that they're moving forward and stuff like that. And so we enrolled her. We literally was not able to enroll her, but we were able to work around asking for the proper documentation. So that's why they were able to provide this
Yep.
for March 21st. Yeah.
So that's a full scenario. So again, I like to show this because this is literally, people come to us and they're like, oh, we have to send a borrower to you like so much in advance before the close date. And that's simply not true. This person was literally in the close process and we were able to help them. We were able to help them in process. And why that's so important is because, excuse me, if you sent this person to do it themselves, I don't think they would know what to request. And we see that a lot. People try to do it themselves. They're not getting the right docs. They're getting docs that can't be used by underwriting, unhelpful. So if there is especially a crunch time and they need specific things, like that is where we come in very handy. So we're likely to be able to get what they need because we know what to ask for in writing. That's really important in writing. In the time that a borrower needs. Is there any other follow-up to this, Grace? And then I'll hit the credit dings. Excuse me. Okay, great. Okay, I hope that highlights a good case study on something we've recently had to navigate. I just wanted to present one really strong case study. Okay. A second thing, okay, credit dings. Okay, this is what we can do. Number one, because there is so much servicer mismanagement right now, and the reason it's really important to highlight servicer mismanagement is because when we send a letter to the servicer asking them to remove late payments due to lack of clarity, that's a great reason because there's so much lack of clarity between their communication and what is coming out in the news, the media, the Department of Education, studentaid.gov, that is a great reason for them to remove it. So we could say, listen, we do say the payment start date was unclear. It was not communicated effectively or communicated across multiple different dates. The borrower is confused and as a result didn't make XYZ payments. We ask you to remove these late payments. And I specifically say that we do this with the actual student loan servicer, not the credit bureaus. And the reason we do this with the student loan servicer is because any updates they make will automatically go to all the credit bureaus. So when people talk about getting credit repair, credit restoration, credit counseling, whatever it is, they're working with the credit bureaus to dispute things. We're not doing that. We're going straight to the student loan servicer and saying, due to lack of clarity, please remove these late payments. The borrower is now aware and will be paying it on time. And then we manage the payment so that they can reduce their payment so it's manageable so they can actually pay them, right? That is our number one pathway. If that number one pathway is we're not getting documentation back that agrees that they're going to remove it or agree to what we're asking, then we can use that same documentation to request that the negative marks be removed to the credit bureau. We could do that. We try to stay away from that because we don't consider ourselves credit repair. We try to work directly with the servicer. If borrowers do want to do that, we can provide them the documentation as well as how to submit it to the bureaus. We stay away from direct bureau submission interaction. Again, we're not credit repair here. So I just like to clarify, but we do have great success in the past doing that, especially when we put the reason why the payments were late. It was unclear, and that's usually a very compelling reason because servicers do communicate in legalese and it's very unclear with what they mean. We literally have borrowers sometimes sending us letters from their servicer asking, what does this mean? So it's usually a great reason to get items removed from the credit report. Again, we have templates. We can work with a borrower's specific scenario, put it into the templates, and even submit it to the servicer. It looks like it comes from them. And I see Jason has a question, so let me take it. Let's see what it says. I have a client, and I love this. I love live questions, by the way. I have a client who has student loans serviced by, Advantage, and now it shows closed on her credit report. It lowered her scores. She thinks they were forgiven, maybe a new servicer. So you want to know your borrower had the same scenario as my student loans. I had just a few thousand left to pay. I'm using my own story, and I didn't pay them off very specifically because I work in the student loan world. I want to be able to log in and understand what's happening. That's the reason I kept $1,000 on my account. Next thing I know, it's like I don't have that anymore. It's nowhere on my credit, nowhere. Somehow, I thought it was a new servicer too. I started searching everywhere. Where is my new servicer? Where is my new servicer? It turns out they were actually forgiven. And I don't know why they were forgiven. I was not a candidate for forgiveness, but they were forgiven. So this is what I would say. The first thing in that scenario is she needs to go to studentaid.gov, log in, and download her My Aid document. That will tell her exactly the current balance and who her servicer is. That's the only source of truth. That document is owned by the government. It's called the National Student Loan Database. That's the data. That's the source of truth. We get all data for borrowers from. That's what we recommend they do. Okay. So yeah, student aid note. Melanie, do you mind getting there's a video on how to get it. Do you mind emailing Jason after this call and giving him the exact video? It's a 30-second video with how to pull that document. We'll send it, but studentaid.gov, and we will give you the exact place she can go pull that document. It is highly possible that if she had a pretty low balance and she's made consistent on-time payments or lump sum payments, that if she had under $1,000 and she's been paying for multiple years, that they just forgive it, because it's not worth transferring servicers. When they transfer servicers, they have to pay the servicer to help manage that something up front, and then they get a monthly fee. It's not worth paying the servicer that amount up front when you owe so little. They're just not going to make their money back. It's just like lost cause. So that's what I found the source of why my $1,000 was just erased. So it is possible. So it depends on how much she owes. What is her payment history? But again, it's also highly possible the servicer's just been changed and it has not been communicated to her. That's the most likely scenario for the majority of borrowers. I just happened to get lucky, I guess. But I've heard it from other people too who have gotten lucky. So it's possible, okay? Any other questions? Oh, you too, please, Grace. Well, we can include it to everybody. We'll include the video on how to pull that document. We'll include it to everybody who registered, just because it's the source of truth in terms of the government data. Okay. I love the questions. Keep them coming. Okay, so we're almost at the Q&A, so please ask more. But what I do want to say real quick is, oh, here's a question, and then I'll talk about this. How long does it take for a servicer and credit reporting agent? Okay, I love this. This is one of the things Melanie and I were just talking about before this call. It takes 30 to 60 days, maybe sometimes more. But you don't have to wait for the servicer to update. That's why the documents we can help borrowers get is so important, is because if somebody changes their plan, credit doesn't actually update in time for most mortgage closing process. Like people are like, oh, I need to go do a rescore. I need to do all that. That's not necessary. If you get the right docs from the mortgage, from the student loan servicer, excuse me, then no credit update will be required in order to move forward with the mortgage process. So I hope that that makes sense, but usually 30 to 60 days. And also kind of similar with communicating with the servicers to report, to update the credit bureaus, that processing time is 30 to 60 days. So if somebody's credit dropped, I would advise them to not put their close date in a month, because the likelihood that we submit docs today and it's all going to be rectified in a month is very unlikely, because we have to communicate with the servicer. Then the servicer in their next cycle of reporting will then communicate to all the credit bureaus. So that alone, depending on when we start the process, will take a minimum of 30 to 60 days. So if somebody has a horrible credit score because they have reported 4 late payments, I would say, I'm sorry, if it's, especially if it's going to really negatively impact their interest rate, or they no longer qualify because it went to like 500, then they need to have time to get that resolved before they can close. So unfortunate, that's very unfortunate, because a lot of people, we're going to have a significant rise in that scenario. So I just want to report that. Okay. All right. So call to action. We can do pipeline reviews for any brands, as well as do them also for individual loan officers. But when I mean pipeline reviews, it means we get information from the 1003 upfront and we report to the loan officers when we can help a borrower. Instead of you guys relying on coming to us when you need to, we can work with a brand to identify what borrowers we can help at the very front of the process, and then we alert you. That's what it means. It means reversing how we help, using data to drive how to help borrowers. If that's of interest, let us know. We are happy to talk to anybody's management team about that, okay? Here's a sample alert that goes out. It just literally says, hey, your client, Jane Doe by this ID, if we don't know their name or info, that's fine. We have a loan ID. We can take their payment from $965 to $252, changing their DTI from 46 to 41. Okay, here's an example. And we can automatically alert you as they fill out the 1003, instead of you having to remember, oh my God, they need loan sense, right? We can actively alert you. And of course, ironically, we're using the example of loan officer Jason. I just think that's funny because we have Jason on the call. So here's a sample alert that goes out. And if this is helpful, it is very similar to like a credit trigger, like alerting people inquiry to another mortgage company if they own that loan, right? It's very similar, except it's on the front end with student loans, okay? And we can estimate the impact of our help right up front. Any questions about that? But I do want to give what was promised. Melanie, if you don't mind putting this in the chat, if there's anybody on your team management that you want us to present the alerts on, we're happy. Otherwise, we have a freebie, which I think is a really great freebie. We have a flyer that you can literally edit, put your name, put your own testimonial. You could click on it. It's in this chat. Put your own name. There's a guide up front on what to change and how to change it. You could put your own name, your own photo, your own contact information, and it will present the value of Loan Sense to your clients with a client testimonial already in there. You don't have to go search for your own client testimonial even. It's a real client, not a testimonial, but it's a real client case study that will help borrowers understand, okay, I'm in this situation, I can help. Like, so everything's already baked and made for you. You just literally need to change the contact, put your own info in there, and then it's usable, right? If you want to use it to promote why you're a trusted advisor. in this specific field, and it's not a niche field. There's 17 million student loan borrowers who are renting right now. So it's not a niche field. So I would, if it can help you build your advisory capability with this generation of borrowers, we're all for it. So there's a great freebie. Let me know if let Melanie and I know if there's any questions about editing it, accessing it. We will put it with the recording of this webinar as well. So now I'm going to open for any other question. For handling MOHELA duplicates. Grace, can you clarify duplicates in trade lines? Is that the question?
Yeah, MOHELA changed their internal servicing, I don't know, almost a year ago now, and they're still only reporting the correct loan to 2 bureaus and the old loan to 1.
Is that okay? So explain to me how that negatively so this is what I would do. I wouldn't deal with the bureaus in this scenario. I would just get a summary, and this works for underwriting. If it's directly from the servicer, we just get a summary of all loans. And underwriting can use that because that's the source of truth. It's not the credit bureau's discrepancy. If your underwriting team says we have to have a credit bureau update it in order to underwrite this loan, it's very easy for us to submit a template to that bureau that needs to fix it with that same statement for them to correct the credit report. If that's necessary. But in most instances, the source of truth is a direct servicer letter. And that's always worked for any situation like that, is if we get the servicer letter, it's the source of truth, then underwriting doesn't require all these updates to the credit reports, especially since 2 of them are already reporting the correct information.
So the servicer letter shows a different loan number as what the active loan is, and a very different loan number from the old loan. The old loan also has an old balance and an old date of last activity. So we're running into a lot of these people who have this on their report where they have duplicates, and they're asking us, what do I do?
Okay.
You know, how do I get this updated? Because I've already talked to MOHELA, I've already talked to all 3 bureaus, and I don't know who else to turn to because MOHELA says that they're reporting correctly, even though they're not.
Okay, in that case, it is possible that MOHELA is reporting correctly and the bureaus continuing to report an error. So the best possible thing, if that's the case, is submitting the documentation we can help pull for that borrower directly to the credit bureau. So that's the best route to go. But we can work with the borrower to request. Here's the number one thing. It's kind of like using ChatGPT, right? You're going to get, if you put garbage in, you're going to get garbage out, right? You have to get very specific with your request to MOHELA and these servicers. We will make a very specific request on what documentation we need. We will take that request and we can submit it or help your borrower depending on how they want to work. It's up to them. We can even e-fax it in for them to the bureau with the right information. And so that's, if you contacted MOHELA, we always like to work through the servicer. If they're saying I'm reporting the truth already and the credit bureau is continuing to report an error, the best way is to say, hey, this is an error. This is the documentation from the servicer with the correct information. We need it updated. I mean, it doesn't say exactly that, but we use the language that's required, right? But we can include that, and that's the best pathway to go about it. If your borrower needs help, we're here to help them. I would recommend that if they've been trying to do it themselves and they have not had the best of luck. I definitely think we can support in that because we've had pretty good luck with those 2 pathways. So, but the context, but them giving the context of what they've done with MOHELA is really important already as well. And sometimes we could just even review what their requests are and MOHELA's response and just correct the request, you know, and sometimes MOHELA will then, it's all about the inputs or what you're saying to MOHELA, right? And then it's also important to get a person at a higher level. Like if someone calls in, we recommend never talk to the frontline agent, to always ask for a supervisor, because the frontline agents are very poorly trained, or they're only trained for about 2 weeks, 2 to 3 weeks max. They don't have as great of knowledge about student loans, and that's the reason they provide such generic information as a response. So if borrowers are taking the time to wait the 3 hours to get to an agent at this point, they really need to be escalated to a supervisor. That's what I'd recommend as well. But if they've done all that, send them to us. We're most likely to be able to help them navigate that scenario, because that's not good. I hope that helps, Grace. Okay, oh, thank you so much for the compliment, Jason. I'd like to have my team watch as well. Are you doing more? Well, Jason, we will, if I have a request to do more, happy to, but we also will have this recorded. But if you're like, hey, let's talk, Jason. I'm happy to send this recording. But I'm, of course, like, if people are like, hey, we did this one on a super quick turnaround, like just our internal networks, not advertising it super large publicly or anything, because we wanted to keep it more like intimate for the people that have been working with us, and that have been kind of following us, you know. But if people want more, like, we already have all the content created. We're happy to go out there and help the market get the answers they need to help borrowers. Otherwise, it's a huge problem with qualifying borrowers, and we really care about helping move the needle. So yeah, let's talk, Jason. Any other questions? Otherwise, we know it's live Q&A. I'm just going to put up this flyer, especially also for the recording. Awesome. I do want to answer one question that wasn't asked in this chat, but that has been asked a lot. Melanie, what's the question? We listed it, that we've been getting this question a lot. I can look it up if you're on mute, by the way. The question.
Oh, sorry, I was talking on mute, Pat.
Yeah, no worries.
Yeah, I have the question. Does getting into an income-driven plan create a new trade line?
I want to answer that because we've been asked that a lot, and I get why loan officers are asking it, because in the mortgage process, you don't want new trade lines to be created, right? It just creates more issues with DTI, more issues with qualification, and getting them through over the hump to close. So getting into income-driven plans does not create a new trade line. If a person refinances or consolidates, that creates a new trade line. But getting someone to an income-driven plan simply lowers their monthly payment on that already existing trade line and loan number. So we're not consolidating and creating a new loan. We are literally just changing their monthly payment, and that's what will be reflected on the credit report. I think that's a really great question that we've been getting, and I just want to make sure to include it on this recording, since I know a lot of people are thinking it. So yeah, with that being said, are there any other questions? Otherwise, I can give you all back a little bit of time, or I might be going over already, actually. Awesome. Thank you all so much. I hope this was helpful. Thank you all for your time. Okay, I'm going to stop the recording here, and I'm just going to stay for a couple more minutes, but otherwise we're done here for today. Thank you for coming. I hope this was helpful.